Hi guys, my name is Matan Lees. I'm the Director of Investor Relations at the GSH Group. I'm joined here today with not Gideon Pfeffer. This is George Harbedian, who is the Director of Acquisitions at GSH. So today we're gonna have I think we have 30 minutes today. We're gonna talk about one of our deals that we're currently raising funds for. Before we do that, I'm gonna give you a brief intro on the GSH Group for those who don't know. And then I'm going to pass it along to George for just a brief presentation on Hunter's Ridge, which is a 455 unit multifamily property in Farmington Hills, Michigan. So about the GSH Group, we're a multifamily investment firm based out of the Midwest. Most of our properties are actually in Michigan. We have a couple properties in Indiana and Ohio. We have 2 properties in Florida and 2 properties in Maryland. But our core focus really is the Midwest. That's where our back office is of about 25 people. That's where the 3 partners have been living and or doing business for the past few decades. So really, that's our home, that's our backyard, and that's kind of where we started acquiring properties. And we focused really in the B to B plus multifamily housing sector, which many people will call workforce housing. A lot of our properties are workforce housing. And for those who don't know, workforce housing refers to kind of this large renters tenant base of what we'll call workforce people who have jobs such as, working in an Amazon distribution center, the medical industry, factories, car lines, etc. The whole theory behind workforce housing is that this is a tenant base that is mostly renters. And as we progress in time, they're unable to be home buyers. Maybe 50 years ago, the same base of people, the same population would be buying homes. But that's impossible today, obviously, as most of the viewers today and everyone on this call are aware. Housing prices are out of control and kind of unattainable today for the majority of Americans. So we target this kind of base of workforce housing that, on one hand, cannot afford to buy a home. They don't have the proper credit because of years of student debt, or they don't even have the capital put down a down payment. But on the other hand, they work in very stable jobs. They work in jobs that in our view, are stable, consistent, and growing throughout the continental United States. So our theory really behind workforce housing drives the way we buy and the way we acquire. And that's kind of on the tenant side. On the investor side, we really do look to provide a concierge service to our investors. Of course, there's plenty of sponsors out there today doing pretty much the same thing we're doing. I think we're different in many facets. One being where we're located, and that's Michigan. We do have properties, like I mentioned, in more secondary markets, like suburbs of Tampa and Orlando, and suburbs of DC, Maryland. But we operate kind of in this niche tertiary secondary market in the Midwest, where it's our backyard, and a lot of the institutions aren't necessarily chasing it today. And we all know that institutions have really changed the game in the past couple of years, pressing down cap rates and so on and so forth. So we operate kind of in this, what we like to find as a niche sub-market, which is our specialty. The other differentiator, I would say, is our concierge approach to our investors. We're extremely transparent, timely with reports. At any point, an investor can hop on a call and, connect with me. And we do have a very kind of intentional social impact component of our firm. We of course are out there for, we always say we have a couple different clients, right? We have our tenants, we have our investors. In the tenant realm, we do kind of envision kind of this social impact reality that we are providing housing in a huge housing crisis, and we're providing housing for what a lot of us know as essential workers in America, who were out there working during the pandemic and keeping us safe. So that's a bit of a kind of philosophy on the GSH Group as an investment firm. Our current portfolio, we have about $1 billion of assets under management, ownership management, 7 full cycle deals, 29 apartment communities, and there's actually 8,333 units. This number is dated, so I apologize for that. And we have about a 10% average cash on cash yield across all of our properties. If we're going to average all the returns. And for the deals that, went full cycle, we have a 27% tracked IRR to the investor. This is just a slide about the trajectory of our equity raising history. GSH began in 2017. We're tracking here some legacy assets. And what do I mean by legacy assets? The 3 partners, which is Gideon, Shmuel, Cohen, and Hanan, GSH. I know, very, very, typical type of naming, but they came together in 2017. But they do have prior ventures and businesses and assets. So this kind of tracks their legacy portfolio as well. And a bit on that operational experience. I mentioned that, GSH has properties in Michigan, Indiana, Ohio, Florida, and Maryland, but the operational experience of not just the 3 partners, but also our executive team at GSH expands across America. And this is kind of what this map is showing you. Where we've done business, majority real estate sector business. And that niche kind of Midwest market I referenced in the beginning has parallel submarkets across the US. And we're looking to expand into those different areas: Texas, Northwest Arkansas, and George, who is the director of acquisitions you're going to hear from in a few minutes, could touch upon that at some point. If anyone wants to ask questions, you're welcome to do so. We are vertically integrated. I referenced our back office in Michigan has about 25 people. That's made up of an acquisitions team, which George leads. And those are the folks who we have analysts, we have acquisition associates who are going out and finding the deals. These are the folks who have really kind of deep connections with the brokers, the off-market sellers. And in Michigan, it's I don't want to say not touched, but it's less touched than all of the kind of bigger markets that you guys may be investing in or hear about. But these are the guys who find us the great deals. And we do have a really good relationship with brokers in Michigan and in the Midwest. And we're able to kind of get in front of deals that today, in today's market, it's so competitive. If you're not able to get in front of the deal, then you really have no chance to buy. And we are net buyers. We're continuing to buy. And so the acquisitions department is extremely, extremely important. It's where everything starts. Asset management, we have a full asset management team that's responsible for seeing through the project's objectives in the business plan. Construction management, it's not even a department. It's actually a separate company that is solely, it's a subsidiary company of GSH. It's called Multifamily Commercial Construction. It is a company on itself, owned by GSH. It has a separate warehouse with full staff, full inventory, which was very beneficial during the pandemic. As most of there were supply chain issues, labor issues, which we're still feeling today. Because we have our own construction company, we were really able to be very hands-on and continue to be very hands-on in our value add work. But also when there are staffing shortages and kind of bottlenecks of supply chains, we were prepared for that because we had a full inventory in our 15,000 square foot warehouse, which is about 20 minutes from our back office. And property management, we partner with best-in-class third-party property managers. The one that we work mostly with in Michigan is called BezTech. They are with us from the second we identify a property, doing their own due diligence parallel to what we're doing. We're comparing notes. We want to make sure at the end of the day that we're comfortable buying the property, they're comfortable managing it. And our asset managers and acquisition team works very closely with the property, and construction management works very, very closely with our property managers. In our non-Michigan or non-Midwest properties, we have similar type corporate high-level property managers that are managing upwards to 40,000 multifamily units. And we're very satisfied with these partnerships. Let's see here. Workforce housing, I touched upon, in the beginning. This is the driving force behind our acquisitions, and we really felt it during the pandemic. We really felt that, people continue to pay rent, people continue to be employed, and if they, for whatever reason, did not, they were responsible in managing their finances. This is not B minus C plus housing. The pandemic really proved our theory of kind of, recession resistant or economic cycle resistant. This is an asset class that, especially in the submarkets that we're operating in, really was resilient, and these are properties that we feel will be resilient for years to come in any sort of economic cycle. The Meadows brand. So I'm not gonna get stuck on this slide too long, but the Meadows in a nutshell is really a kind of overarching rebranding campaign that we're planning to do, that we've actually already started doing across all of our portfolio, our entire portfolio. We're going to firstly change the name to the Meadows on or at, and then reference a location. So for instance, we bought a property in Farmington Hills at the end of December, and we renamed it the Meadows at Farmington Hills. So the idea here is to have one overarching brand, which thus brings value to the portfolio, but also we want to provide a new approach to the way the owner treats their tenants. And that's something I touched upon a bit in the ESG social impact sector of our philosophy. In that, in an A+ property, the service you're getting as a tenant is obviously much higher than what you would get in a B- or B property. We want to create kind of a new approach to how we treat our tenants. We want to call them, we've already started, community members, and not tenants or not residents, and provide them with kind of a shared experience and a reason to be happy about where they live, whether it's discounts or kind of easing them into the community if they move from a different location. But there's many factors to the Meadows brand, and we do plan to apply this across all of our properties. We've done it to about 7 of our 23 properties today, and that's going to continue to grow. And so with that, I'm going to pass it off to George to talk about our latest deal, Hunter's Ridge. And so George, the floor is yours.
Thanks, Matan. So as Matan said, I'm George Gideon, Director of Acquisitions. I've been with GSH since company was founded. Also done a lot of work on the asset management side and then construction oversight. And thank you very much for everybody that took their time out of their busy day to join us on this webinar today. So Hunter's Ridge, it's located in Farmington Hills, Michigan. Farmington Hills is an upper middle class community. It's 455 units. And it's currently at a 94% occupancy. I want to start talking a little bit about the backstory. So Hunter's Ridge was a part of 27 properties that a longstanding family owner operators, actually 2 families, they own this property for at least around 40 years, actually about 45 years. And what was consistent across their whole portfolio, as well as at Hunter's Ridge, is that they managed to an occupancy. They maintain the property very well, but they never really invested in upgrading the units. They just wanted to keep everything full. basis is very, very low. So, you know, one of the reasons why GSH was very intrigued with this deal is that they're significantly below market. And the property is one of the most unique properties that I've come across, and I've looked at hundreds and hundreds of deals every single year. So it's 80s vintage. Every single unit has its own garage that's attached typically on the sides of buildings, but sometimes it actually is below the structure. The average square foot is roughly 1,500 square feet. The smallest unit, the one bedroom, is 1,040 square feet or 1,000.
George, sorry to interrupt you. I'm just controlling the slide, so let me know if you want me to slide down. Also, I think someone is typing, so if whoever that is could go on mute, that'd be great. Thank you. So George, let me know if you want me to slide down.
Sure. So that's kind of like the backstory and what's currently going on. So GSH, we looked at this opportunity, and as Matan said, we work very closely with Best Tech. They manage thousands of our units. You know, I get up to date, you know, monthly trends based on operating expenses, payroll. We always are having a heavy, you know, consistent conversation with them just so we can make sure that we are staying ahead of trends with the labor market that we're experiencing right now, so on and so forth. But anyways, getting back, Hunter's Ridge, 455 units. Has been marketed severely below market. We estimate, if you want to scroll down the 10, I think that
Sure.
We estimate that there's about $300 that they are currently below market. So that's just the mark to market. Then we have a very robust, we plan on spending roughly $20,000 on the interior of the units. We actually have a beautifully designed, we commissioned an architect that we worked on other deals. They're putting together, they put together some beautifully renovated units with some wonderful finishes. And then we estimate that there's going to be $250 to $400 in addition to the mark to market. You know, because once again, and I don't know if everybody's familiar, but this is right on the north end of Farmington Hills, and then it borders West Bloomfield. So where this property sits is 14 Mile and Orchard Lake, right? And at that intersection, directly across 14 Mile, you have Whole Foods, you have J. Alexander's, you have a lot of big brand box retailers, and then about a quarter mile north is a Ferrari dealership. All right. And I say that just to kind of put into some context on where this property sits, and you know, where we strongly believe that the opportunity to go in, beautify the community, increase rents, and you know, and in all honesty, still provide a wonderful value, and that's really considered is affordable in comparison, you know, to the quote unquote kind of housing crisis that we're experiencing today.
Worth noting, sorry to cut you off there, George.
No,
there's a few large new developments in the area in Farmington Hills. Farmington Hills is kind of an upscale submarket. I actually grew up a mile away from this property. There's a lot of new development in this submarket, and these new developments are obviously building to, you know, maybe what, $350,000, $400,000 a unit, George, or more?
350 to 370 is what the private information that we received.
Okay, so this obviously, you know, you need to build to rents that make sense, and so these units are going to be renting for upwards to $3,000 and more. Our idea at Hunter's Ridge, because of its location, is to come in and just elevate the property to compete with the new product, but at a much more attractive price point. So you see here, you know, we're going to be offering kind of, you know, of similar quality to new product. As George mentioned, we're going to be investing about $20,000 per unit. And we're going to be kind of competing with the new product, which is built on much smaller land, with much smaller units. The average unit size at Hunter's Ridge is 1,500 square feet, George, or 50, yeah.
That's correct.
So
1,500.
So we're going to be competing with the newer stuff, which is, $3,000, $3,500 of for like a one, 2 bedroom apartment. And their average unit size is 850, 900 square feet.
That's correct.
So our theory is really based on, where this property is situated and what we know about the submarket from being, 15 minutes from it, is that there is a need, and not only not only a desire, there's a need for this type of product where there are folks who live in the area who simply can't afford that new house, okay, and they also can't afford that a new multifamily community. This is going to be, kind of a home run for these people who can experience the same quality of housing on a much larger floor plan and much larger acreage in communities that were built in, the 80s and 70s. Today, obviously, it's built on, a much smaller acreage. So they're going to have that sprawling green space, and we're going to add amenities that, you just can't have at the newer properties because there's no space. So that's kind of, sorry to cut you off, George.
No, that's okay.
And I know we have about only 8 minutes left, so I kind of want to, George, if we want to keep going here, if there's anything I missed about Hunter's Ridge.
No, I think this is pretty much everything that I went through.
Yeah. Okay. Do you want to talk?
Yeah. So let's talk about the interior units and some of our exterior. So as Matan said, we have a great opportunity that the newer product just doesn't have the capability of. We're really going to enhance not only just the curb appeal, but really the amenities. The entire clubhouse, we're going to go through a complete renovation. I mean, we're going to completely reimagine where the clubhouse sits, the space from the clubhouse over the pool, and really just enhance it and bring it, just make it absolutely beautiful. There's roofs that, I mean, we have roofs that we're going to be replacing. We have about another $19,000 that we're planning on investing into the exteriors. And on every single unit, as you can see here, this picture that's at the bottom here is going to be very close to, I think, what we're going to do. All brand new cabinets, new lighting, stainless steel appliances. That was actually a wall where that half wall is and cabinet. That's actually a wall on almost, I'd say 80% of the units are kind of set up that way. We're going to be removing that, similar to that. And then we're also debating if we're just going to maybe just remove the wall completely and then put an island in the middle of the kitchen. We're waiting on a couple quotes there, but I mean, just absolutely beautiful kitchens. And then we're going to have LTV throughout, update all the bathrooms, new paint colors. And, we're going to do an exterior paint and facade change, just kind of bring it back to life a little bit more.
Also, I do want to note that this unit, which is what George mentioned, we're going to be building to or renovating to, the current ownership renovated almost to the standard that we plan to renovate to, and they're achieving the premium in rent that we foresee in our business plan. So there is some validation beyond just, our own due diligence. Like it is happening today. Yeah.
Correct.
Let's see. These are just, rent comps. And if, is there, let's see here. George, you think there's any, but before we open up to questions, because I know we only have 5 minutes left, is there anything else that you think we should cover here?
I mean, that's nothing else that I could think of. We are going to be purchasing this property off of bridge financing. And we typically in our models, we look at doing bridge to permanent financing in the 3rd year. So then there will be a capital event that gives us enough time to execute our business plan. Oh, one other thing I did want to talk about is that we're going to be doing rapid renovations at this property. And what that means is that we are going to go in and renovate almost everything except for flooring in the living rooms, but in the flooring in the wet areas, and then So in the kitchens and bathrooms and in the hallways, we're going to be renovating the entire unit while people are going to be living in there. So then upon renewal, we're able to quickly get the rent increases, and then we don't waste time with having 20 units offline every single month. And then what ends up happening is you lose about 8% typically of your yearly income. So, but we are going to be doing everything from bridge loan and then refining into permanent financing in year 3. And I don't know if we covered this before, but we are offering a 9% preferred return. And as somebody said in the comments, we do a 65-35 split. Somebody said that is a little heavy of a amount, but we offer, a very healthy preferred return. So typically people offer much lower preferred return and then have a lower promote. Just the way that we've always structured all of our deals. I think that's pretty much it. We want to open it up to questions.
We do have a question. Why is the Midwest an overlooked opportunity?
Well, I wish it still kind of was. The Midwest always, it wasn't as sought after in the last 2.5, 3 years. I'd say that it's definitely beginning a lot of attraction, but 4 years and before that, everybody wanted to be in the Southeast on each coast. And in the Midwest, had a little bit slower recovery than you'd say the Southeast or each coast after the Great Recession. But, I know Matan said that earlier, and I don't mean to disagree, but, these last couple of years has been a lot of attention just because there's so much capital chasing yield, and in the Midwest, you can still get a great value for the capital that you invest. So, now we're competing with all the big names and coming out of New York or even in the West Coast in order to secure these deals.
What gives GSH the operational advantage in the Midwest over some of these larger players or players from other regions?
Well, go ahead.
No, I was just gonna say, I mean, we're there, and you reference compared to other people's in the region. I don't know so many private real estate investment firms like ourselves in Michigan. I mean, I know exactly who they are, and I know how they operate, and I know who their sponsors are, and they're good people. I think the experience of the 3 partners and the experience of the executive team at GSH really brings a strong diversity in many different facets, and that kind of comes together in just a really robust system, and that's why we've been able to grow quickly but responsibly, and why we've been able to deliver just very secure and, in my opinion, very superior returns in an ethical way to our investor partners.
Yeah, I mean, additionally, it's everything is in our backyard here. Intimately know every single community in the Metro Detroit area, or really even Michigan. And as Matan said before, we are very vertically integrated. Our construction company has about 60 employees, 15,000 square foot warehouse, and Best Tech is also headquartered here. We meet with them regularly and go over our portfolio. And somebody coming out of New York, if you tell me to meet you at Hunter's Ridge, I don't need a GPS. I know how to get there.
So the Midwest is such a vast area. Why Michigan?
What do you mean by the question?
Oh, so I'm sorry. The Midwest, like you said, is seeing more interest. Why is Michigan a bright spot in the vast Midwest? Because as let's say a person from the East Coast, we think of the Midwest could be anywhere from Missouri to Ohio to Michigan.
Sure.
What makes Michigan such an attractive state?
I think Michigan has a name to it. You have Detroit, you have the Motor City, and it was famous for for that reason. And then it was also infamous for that same reason, that brought the downfall of Detroit. I think today, you know, and I'm looking very recent, I'm looking the last couple of years, you've seen an influx of tech related automotion industry. And what do I mean by that? I mean EV, I mean chips. You have plants sprouting up from the big car companies around our properties. So there's this kind of new kind of automotion revitalization happening, but that's super recent. That's in the last couple of years. I don't know if George has something to add about prior to that, which makes Michigan or today attractive.
Well, I think that, you know, especially Michigan kind of got, or Detroit kind of got a little bit of a bad rap and was hit really hard, you know, as the automotive kind of like slowly got led up to the Great Recession. We were losing, you know, some employment, population, so on and so forth. Michigan now has been having a positive population growth. And as Matan has said, is that the employment base is really diversified. You know, 10, 15 years ago, it was really tied to the automotive. You know, not only do you have the automotive companies, you know, thriving again, you have the two biggest mortgage companies or the biggest lenders in the nation for residential, United Wholesale and Rocket. They're both based in Michigan. And, you know, Dan Gilbert kind of like led the charge, but, you know, Michigan quickly followed suit to really get a lot of other big major employers and bring them into Michigan to create some, you know, economic diversity or employment diversification, if you will. And you've seen the positive growth, especially over the last 7 years.
Okay. So we're at 4 past. Is there, can you guys give out your contact info and tell people how they can get connected with you guys if they want to get more information about the fund?
Sure. Yeah. So you guys can contact me. I'm going to type my email in the chat right now. It's my name, Matan, at gshrealestate.com. You can also check out our website, gshrealestate.com. There's ways to kind of look over more about what we just talked about today, our portfolio, get in contact with us. A lot of interesting reading material on the website. So definitely reach out if any of this sounds interesting to you. I'd be happy to have a follow-up call and see if we're a good fit for you. So I think.
Okay, and what I was gonna do is just to let everybody know if they want more info, you can also see both of GSH's listings on our marketplace page. So you can get even more details that can also connect you with the company. The image is not loading on my side, but these are the two right here, just maybe the slow internet, but this is a way that people can get in contact with you as well.
Great.
Thank you so much.
Thank you, everyone.